The broadcast is now starting. All attendees are in listen-only mode.
Hi, and welcome to the webinar. Ron here at Ablesys. Take a look at the charts and look at what you should be looking for on your chart, or we'll kind of test out the software and see how it worked. Today was a very choppy day. After a not really nice downtrend intraday, it was just sideways all day, very choppy and sideways. And I wish somebody could do something about that, but obviously we're all at the market's movement. We're all at the mercy of the market's movement. And with earnings season and with market at all-time highs, and you got a big Fed announcement tomorrow, nobody's willing to make any big bets. So it's been kind of quiet, and kind of sideways, really. But luckily, we've got the no trade zone, so we have triple confirmation, although we don't trade. We don't have triple agreement with the 1 minute, 2 minute, and 3 minute all agreeing no trade. So fortunately, the no trade zones kept us at about 50% of the chop, because without Able Trend, man, it would have been a brutal day. It would have just been a disaster. But actually, let's take a look at a longer term chart first. I like to start with a stock chart because the software works just as well. It's just as accurate and profitable with longer term stock trades for those who can't be in front of their computer, who aren't a serious day trader. Because if you're not a serious day trader, it's not even worth doing. You got to do it full time. You got to be there, like anything else, to be successful. You got to put the time in, because nobody knows when a big move is going to come. There's usually only like 1 or 2 big moves a day. So it's really important to catch that, because if you don't, it's very difficult to win. I mean, you don't catch the big move, it's probably not going to be a great day. Being that the market will only give us 1 or 2 real good chances, sometimes 3 chances to make any money. Rest of the day, just small moves, a little up, a little down, but of course you just don't know it at the time, so you got to be there to see what happens. So this is IWF. I showed this one a couple of weeks ago, and we're still in this one. Looks good. What we're looking for on any of these longer-term stock charts, this is really good for swing or position trading. I've got a daily, weekly combination right here. We want to have that weekly arrow, which is the blue. Anything blue with Able Trend means buy it. It's going up. It means uptrend. We've got a blue price bar, and we've got the blue dot. This is the daily dot. This is the weekly. So that's why you get it every 5 days, the arrow. But notice everything is blue. Blue dot, blue bar, blue arrow. That's called triple confirmation. And the first time it comes together, meaning you've got red arrows right here. Red arrows, red dots, switch to blue. That's a trend change. That means we're going higher, at least on the daily chart. Now we're waiting for the weekly to agree. Okay, great. It agrees. There's the weekly indicator. So we've got the daily, we've got the weekly, dot, an arrow, a blue bar. We're long here at 252. Still in it at 265. That's a nice little trade there of about $13 in about 3 weeks or so. Now you say, okay, well, when do I get out? Well, we put the stop at the second lower row of blue dots below the price. The previous lower row. You've got a row of blue dots right there. That's support. Stops the price from going lower. That's why the prices came all the way back down, dropped $6, $7 in 2 days. Interesting, amazing how it stopped exactly at the dots 3 days in a row. That's so cool, because we put those dots in there 2 days before it even happened. Well, the software told us, hey, there's going to be a strong wall of protection. It's called support under the price. Stay in the trade. Don't get nervous. If you don't have Able Trend, a lot of people, hey, drop $6. I better get out. I'm giving back all my profit. Okay, fine. Do that. You missed out on $12 more on the way up right now the last week. Able Trend traders didn't. A disciplined Able Trend trader, a trader who doesn't trade on his emotions and trades on these Able Trend algorithms that are a heck of a lot smarter than you or I could ever be. Plus, we've got 2 time frames combined into one chart. So they both have to agree, otherwise no trade. They just got a lot of odds stacked in their favor. That's the point. Now the stop would go right there. Previous lower row of small blue dots below the price. You got these 7 or 8 in a row, and then you've got this step down. So actually, I like to put the stop. Personally, I put the stop 2 steps down. I'm finding that to work out even better, especially that the market goes up 4 out of 5 days in a week. The market goes up 4, 1 down, over the last 100 years. So, of course, it's going to, pick up trends, up and down, bull and bear markets, but overall, the market goes up many more days than it goes down, of course. That's why it's up, thousands of percent all these years. Yeah, certainly downtrends, but the point is, but just give you plenty of room to breathe. You stop plenty of room, especially on the uptrends, because the market goes up more than it goes down. So we got a big winner here going, and we're just going to stay in it as long as we're above the blue dots. As long as we're above these blue dots, you're safe. Stay in the trade. You got a nice wall of protection, and here's a perfect example of it right there. If you don't believe me, there's an example right there. It came down, hit the blue dot, bounced off, and it went back up. Cool stuff. Really nice. Very, very profitable and very helpful. Okay, let's jump in and take a look at the mini NASDAQ today. After this big down move, it was just chop city on all the E-minis today. It was just a sideways, ugly day. I hate days like this, but can't do anything about it. Now, I always like to wait the first 5 minutes before you trade because there's a volume explosion. Now, the first and last 2 hours of the day is the best hours of the day to trade, generally speaking. But you don't know that. I mean, it could be different every day. I'm just saying overall. But give it the first 5 minutes generally. But you can tell already we were in a serious downtrend. I mean, look at all these red 3-minute sell signals. Right below that is a 2-minute sell signal. Right below that, the red dots is a 1-minute sell signal. So you knew, or at least had the assumption at the open, we're probably heading lower. And the software nailed it as usual, perfect. And that's exactly what we did. Now, even though we have the buy sell signal here, again, that's right at the 9:30 open. So, I'm just going to wait for a sweet spot before I get in. And there's your absolutely perfect textbook sweet spot. The price went right up to the red dot, which is resistance. That blocks the price from going higher. Stopped, as usual, turned around, bounced off of it, and came back down again. Red means downtrend, sell. Blue means uptrend, buy. Green just means sideways, but you got red dots. A 1-minute sell signal, 2-minute sell signal, 3-minute sell signal. And you got a red bar, 4 sell signals on top of each other at about 9:35 Eastern, 5 minutes after the market opened. Some Eastern. I mean, you can't get any better than that. You just got a pile of odds stacked in our favor. The software screaming at us to get short, that the odds are really in our favor it's going to go down. That's exactly what it did. Now, put the stop just 2 points above the top of the triple confirmation bar. Ideally, I'd rather you put the stop above the red dot. That's an even better place because, as we know, and as I keep saying, the dot blocks the price from going higher. The red dot is resistance. So we want that dot there, right below our stop loss. So that is a very small chance of getting stopped out. But everybody has different risk tolerance, and that dot was like 15 points away. That's about borderline of where I would be starting to get a little uncomfortable. So just put the stop then 2 points above the top of the red triple confirmation entry bar. Down it goes. We're not even thinking about getting out until we get 2 green bars in a row. Obviously, red bars and red dots and 1 minute and 2, all the way down. 1 minute, 2 minute, 3 minute, everything pointing down. Everything is still red. We didn't have a blue bar for the first hour till finally over here. We didn't even have a blue bar. Nothing blue, not a blue dot, not a blue anything. What's that telling us? The software's telling us it's going down. We're still in a downtrend. Don't get nervous. Stay in the trade. You got to grab these big winners. There's only 1 or 2 a day, sometimes 3, but on an average day, 1 or 2. You don't pick up this big move, the rest of the day, it's not going to be, there's a good chance you're not going to make a lot of money the rest of the day if you don't hit the big one. Okay, there's the 2 green. Now, the stop just goes at the second higher or previous higher red dot on the way down. So, like, for example, we're here. There's the dot above it. There's where the stop would be at that point. Just keep moving the stop lower and lower and lower. Now we get 2 greens. When you get 2 greens in a row, after you're in at least 10 points profit, and at this point over here, we were 40 points profit. No, 50 points profit. 50 points profit at that point. Exactly 50. That's $1,000 the software gave to you, gave to us all. So got to take advantage of that. So stop goes just 2 points above the higher of the 2 green bars. Kept on going lower. Just because the 2 greens don't mean we get out. But stop a little higher. Down it goes again. There's 2 more greens. Stop goes there, and we'd be stopped out right about there. But, we nailed over 50 points. So 55, but I'll just call it 50 points. It's $1,000 per one contract, just for one. I got clients tell me the other day, trade 5, trade 6. I don't ask anybody. It's none of my business. But if you just trade one, that's a heck of a nice move. If you trade multiples, I'd always take one off after 5. Say you trade 3. I take one off after 5 points, one off after 10 points, and then let the third one run. Let the software tell us where to take out. This way you lock in some quick money. If you trade multiple contracts, I would always take one off after 5 points. Just so you lock in $100, it's a comfortable feeling, because trading is very psychological, and it gives you a good feeling. Feeling knowing that, okay, I'm good. I locked in 100. I'm okay on this trade. I'm not gonna get beat up. Okay? There's another sweet spot. Now, that's a second sweet spot in this trend. There's the start of the trend, the big red dot on the red bar. It's the second sweet spot. So just be a little careful on the second one. The first one, which is right here, the trade that we talked about, that of course you always take the first sweet spot. Second one, it's up to you. I'm not a big fan of the second one. It's a little more risky. The first one is always the more powerful one, the lowest risk. Second one's a little more risk, but that's a perfect sweet spot for taking that one. You say, there's 2 greens here. We put the stop. No, you're not 10 points in profit. Got to be at least 10. Otherwise, if you can't make 10 points on the trade, then we're not going to use the 2 green bar exit. So you know what? These greens, we weren't quite 10 points, so can't count that. There's, of course, the blue bar, the blue dot. We actually lost maybe 2 or 3 points on that trade. But, we made 50 on the trade right before it. So that's okay. We can live with that. You're certainly going to be losing trades. That I'll guarantee you. And then it got, after that one big winner or that software gave us earlier, it was just a choppy, ugly mess the rest of the day. Not fun. Nothing I could do about it. You can do about it. None of us could do anything about it. But here's the beauty of it. This is a losing trade right here. Stop 2 points above the top of the red bar, and we gave 10 points back on that one. But here's the beauty of it. We stayed out of this here. We stayed out of no trade zone. We weren't trading during that choppy mess. Okay. By the way, this is a triple confirmation buy signal. Blue bar, blue 1 minute, blue 2 minute, blue 3 minute. Everything is perfectly lined up. And that was a break-even trade because there's the second lower blue, the previous lower blue dot below the price. When the price is up here, you got your blue dot under it. We never put the stop there. We always put it on the second lower small blue dot below the price. So that was a break-even. But again, no trade here. The no trade zones are fantastic because Abletrend's not only going to tell you where to buy or sell, it's going to tell you when not to trade. And that's just as important. It's just as important knowing when not to trade as knowing when to trade. Because, not losing is the same thing as winning. And that's such a big edge that we have at Abletrend, the triple time frames and the multiple algorithms all combined on the same chart. Because it's a huge advantage. It keeps us out of trouble. No trade zone there, no trade zone here, no trade zone there. Okay? Break-even trade there, small winner actually, but we'll call that a break-even, break-even. Let's see how this one did. Small loser there because we'd be out on the blue bar, lost about 5 points on that trade right there. There's a triple confirmation sell signal. Now, here's one you won't put the stop at the top of the red bar. Why? It's a short red bar, which is good. You always want to get in on the shorter bars. The longer bars are by far the most difficult ones to get in on. And the red dot, it's only like 5 points above the price. So use the dot to your advantage as much as you can. You just put the stop a couple points above the top of the red bar. Now you've got protection. Look over here. Price goes right to the red dot, stops, didn't get stopped out. Price goes here, hits the red dot again, stops, didn't get stopped out. Did it again a third time here. Price went right to the red dot, bounced off and it went down, didn't get stopped out. That's why you always want to have that dot in between the price and your stop. If you can. If it's too far away, totally get that. Totally get that. Then just use the top of the red bar. Okay, there's our 2 greens. And at this point, we were about 15 points in profit. And 1 minute later, we'd be stopped out right there. So that was a good one. 15 points is $300 on the mini NASDAQ, which is our favorite market to trade. And the mini Russell is another good one. Now, it's a very choppy day to day, just like the NASDAQ and just like the whole market was. But the mini Russell is a good one to take a look at. I look at both of them at the same time. That's what I look at and see which one looks a little smoother. Which ones look a little? One's looking really ugly, choppy, like the Russell today was just a mess. Forget it. Then and you see the Nasdaq looks a little better. Well, then you jump there. Okay, so that was good there. That was 300, made up for some of those earlier losses right before that. A triple confirmation buy right there. Lost a point, 2 points, maybe break even, somewhere in there. Again, look at this choppy, ugly mess. Down, up, down, up, down, up. Tight little trading range. I mean, nobody wins there. You get killed. Anybody would lose there, just as we would too. But the nice part, again, we weren't trading during that choppy period. The software kept us out of the chop. Not 100%. I'll repeat third time. They'll be losing trades, losing days. Count on it, because there's no perfect system in the world, nor is this. Anybody tells you that, run the other way. That they're lying right to you. But then it's the end of the day right here. This is on the Eastern, so it's 4 o'clock. It's the close. That's the end of the day. But again, you see how these no trade zones, I'll just zoom out a little bit. Look at all these no trade zones that kept us out of a choppy mess. Because if anybody was trading during that time, we would have lost. You can't win during chop. But that's what gives us the big advantage over every other indicator out there. We've got this no trade zones, what keep us out of trouble in a really choppy day like today. It works just as well for stocks, for futures, for Forex. It's whatever you like to trade. For day trading, for long-term trading, like I showed you before, that stock chart I showed you. And by the way, let's just go back to that real quick. Let me just show you how to change the symbol. This was that IWF that we're still in right now. We got in right here at 252. We're at 265. You got a call option on that one. You're killing them. And they changed the symbol. You just type on the keyboard. I didn't use the mouse. I didn't touch anything. I just went to the keyboard and typed. Just for example, Goldman Sachs. Click enter on your keyboard. You got a new buy signal. Just came in a couple days ago, last week, on Goldman Sachs at right around 340-ish. And we're at 346. So here's one you can even take a look at. It's only up a couple bucks, $6 or so since the software recommended to get in. So this is one you might want to take a look at. And this couple days ago when the market went down and most people got get nervous, I better get out. It's going down. No. We were doing the opposite. We were saying buy in. You're hitting the blue dots. The blue dots of support. They block the prices from going lower. Those are great places to be buying. And then there's your perfect sweet spot. That's a safe place to get in. Prices hit support, bounce off of it. The bars go from neutral back to blue, which means uptrend. So right there at 340 2 days ago, nice little buy signal on Goldman Sachs. If it should happen to pull back in the next day or two, anybody who's not in it, take a look at it, see what you think. Software likes it. Really nice trade was back here. Oh my God, this is insane. Look at that trade back in November. Never went under the blue dots. Stay in the trade. You're safe. Everybody else is getting nervous. Oh, it went down $2, $3, $5. You better get out. No, stay in it. Naval trend traders didn't get out. They stayed in it. Now, when it finally closes under the blue dot, and I mentioned this third lower blue dot below the price. The price is there. There's the dot under it. There's the second lower blue dot. There's the third right there. Okay, now it closes under it. I'm out at 285. But I mean, killer trade, big money. In at 215, out at 285. Oof, I'll take that all day long. So when do you get back in? There's the sweet spot. Blue bar, touching the blue dot. Weekly agrees also. Blue bar, blue dot, blue arrow. You get right back in again here at 290. When do you get out? You get out certainly on the red bar at 325. So big money here on Goldman Sachs the past 10 months. Using Able Trend was only three trades. And you got another one just came in last week. So I just wanted to bring that up. Keep an eye on this one. If you like banks, the software likes this Goldman Sachs. Steve K. Oh man, Steve K is a killer Able Trend trader. Very disciplined. Steve took 46 points on the 1, 2, 3 NASDAQ chart that I just showed before. 4 winners on 8 trades. He averaged 19 points. On the winners, the losers were, of course, always a lot less. They were only 8 points. And in reviewing my past trade logs, he says I stopped trading the dead zone, more losses than wins. Yeah, that's what I always say. Be careful between like around 12:30 and 1:30 for sure. In that area, Eastern, 12 to, in that area, it's lunchtime. Market gets really choppy during then. And Steve was flat, broke even on the RTY today. Steve said he had a break even day on RTY, which is actually, you did good, Steve, because it was actually a smaller losing day. Stephen T also says he broke even on RTY. You guys did excellent today because it was extremely choppy. And you break even on a day when, non-able trend traders would have gotten crushed today. So breaking even because of all those no trade zones, believe me, that was like winning a ton of money on a day like today. Okay, got to move on. And then Thursday, I'm promise, Harry, I'll go over that. I'll add in the scalp chart too, for sure. But it's always the same rules, same color, same dots. The scalp chart is just a little different, that we just simply buy anytime the price hits the blue dot or the blue arrow. And as long as it doesn't close under it, of course, it's got to close above support, which is the blue dot or the blue arrow, but not more than 8 points above, because then you'd have a 10-point stop, because we put the stop 2 points under the blue dot. So if you're 8 points above, 2 points under, max will ever risk is 10 points. And then, of course, the reverse is true on red. If it hits a red dot or a red arrow, and as long as it closes under that, doesn't break above it, then we're going to go short. And scalpers just go for 5 points. You can do anything you like. And here's a suggestion that I like, is if you're quick enough. That's the hard part. It's very difficult to do this. But if you're quick enough, you can put your stop at 5 points. So this way you're guaranteed the 5 points, and it maybe goes up 8 or 10 or 20 points, and then you really hit a home run. So that's another suggestion on the scalp chart. Just wanted to throw that out there too. All right, thanks for being here, everyone. I'm already going past my allotted time limit, but one quick question. Is it better chart than the candlesticks? It's much better, Monday. Absolutely much better. There's no comparison. It's that much better. Do you recommend both RTY and NQ? Yeah, like I said, either one. You just don't know which one's going to be the better one. But like I mentioned earlier, I look at both at the same time, and see which one's looking smooth that day, and it's just an educated guess is all it is. You could guess wrong, but all these years I'm here, we've been recommending or suggesting both the NQ and the RTY for intraday trend trading. You're welcome, Steve. Steve K. Thanks everyone for being here. Hope I was helpful. Stay safe and have a good night.